things real estate, money matters.
Hey, I need to tell you something that is going to make some of you mad. Your fixed rate mortgage is not actually fixed, but your payment can absolutely go up. And right now it is going up for a whole lot of people. Let me break this down. There was a survey of over 1,000 homeowners. Almost 40% of them said they believed their monthly payment could not change if they had a fixed rate and an escrow account. 40%. Your mortgage payment has four parts: principal, interest, taxes, insurance. Your lender locks the first two. Nobody locks the last two. Your property taxes and your homeowner's insurance sit in something called an escrow account. Think of it as a jar your servicer fills for you. A little goes in monthly. Once a year, the bills come out. If the bills come in higher than what they collected, you get a shortage and you get a letter. Now, here is where it gets real. Cotality is calling rising escrow payments one of the biggest risks in the housing market this year. They are projecting that around 65% of escrow accounts come up short in 2026. 65%. That is not a corner case. That is most people. And the average shortage they are projecting is right around $2,100. Pay it in one lump or spread it over 12 months. Either way, your payment goes up. So, why is this happening? Two things, and they are climbing at the same time. Number one is insurance. The average policy in this country is running right around $3,000 a year now. And here is the part that stopped me. Premiums are up about 46% since 2021. That is roughly three times what regular inflation did. Number two is taxes. Home values ran up hard from 2023 through 2025. Assessors move slower than the market does, and they are catching up right now. So the tax bill on the house you bought 3 years ago is not the bill in your mailbox today. Put those together. Taxes and insurance now make up about 21% of the average mortgage payment across the 450 biggest metros in this country. Translation: roughly a fifth of your payment is not building you a single dollar of equity. Now, let me bring this home for my markets. In Georgia, insurance is projected to climb about 10% this year. That is one of the steepest jumps in the entire country. In Michigan, the projection is about 8%, but Detroit did something worth paying attention to. Assessments went up about 10% citywide. If you have owned a while, your taxable value is capped at a much smaller increase. Here is the catch. That cap goes away when the house sells, so a buyer does not inherit the seller's tax bill. A buyer inherits a brand new one. If you are shopping in Detroit, do not budget off the current owner's taxes. That number is going to move on you. And for my investor folks, this one is quietly killing deals. I have seen deals penciled at a 1.25 debt service coverage ratio drop to 0.95 the moment a real insurance quote gets plugged in. DSCR just means, does the rent cover the loan payment? Under 1.0 usually means it does not qualify. Same property, same rent, same rate. The only thing that changed was an honest insurance number. So what do you do with this? Three things. One, read your escrow analysis when it shows up. Do not toss that envelope. Two, shop your insurance every year. Loyalty is not being rewarded right now. Three, if you are buying, ask for a live quote and the reassessed taxes, not the seller's old bill. Quick reminder, this is not me telling you what to do. This is me showing you what is happening so you can plan around it. Every situation is different, and what you qualify for depends on your numbers. Always speak with a licensed professional before you make a big financial decision. If you want somebody to run your real payment, taxes and insurance included, before you buy, refinance, or add a rental in Atlanta, Detroit, or any of the 8 states I lend in, visit FortKnoxSolutions.com for mortgage and FortKnoxInvestor.com for investor resources. Boss Up with Latanya Knox.
This concludes our session for today. If you're interested in investing, please check out our website for all your real estate needs. Thanks for watching. All things real estate, money matters. All things real estate, money matters.